And that sound means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the markets one step at a time, take a look at the technicals, talk about the news, break down the price action, give you guys our insights so you can better run your daily routine. And happy New Year's Eve, last trading day of the year, last day of the year of 2020. And we're all going to be welcoming 2021 here very, very shortly. Got just a jam-packed fun show here for you today from a coaching perspective. We got a full crew here. We got Tyler running screens. We got Mark and Matt, myself here as always. Coach Cody is here. And we got Tanya on the back end doing the production on our YouTube channel. As always, appreciate everybody coming out and glad you're spending your time here with us on the day before the first day of the year in 2021. Let's bring the coaches in. Let's talk to them. Matty first. How are you doing today, sir?
You know, Tim, doing absolutely fantastic. Excited to hang out with the crew here today. It's New Year's Eve, right?
Yeah, it sure is.
It kind of snuck up on us this year.
It did.
It just snuck up on us. All of a sudden, 2020 is in the rearview mirror. I don't even know how to feel about that.
I think we're all trying to process it. It's like
days go slow and years go fast. The old saying, and it's so true. Days go slow, years go fast.
It is true.
Wisdom.
Thank you.
I like it a lot. Tyler, how are you doing on a Thursday, the last trading day of the year of what's been a wild up and down year for so many people, but the markets have been crazy as well. Tyler, how are you doing today, sir?
You know, my head right now is this big after yesterday's Trade Masters. So I still got a pep in my step. I got to tell you that. It was a joy. It was a joy beating Cody. Got to be honest.
You know, I haven't seen the replay on this one yet.
I heard it was domination, Tyler. Is this true?
Domination is a good word, Matt, actually.
Yeah, I would disagree with that. It was not domination. And the metaphor I gave last night, and Mark liked my metaphor. This was like from the movie Troy. It was Hector versus Achilles. I was doing well, but when you go up against Achilles, you're not surviving. And that was the metaphor I gave. And yeah, Tyler did. It's like I come up with a good pick, and it was like, oh, that's fantastic.
Decent metaphor.
Tyler were just
terrible movie though.
Wait.
That's blasphemy.
No,
Cody and I are gonna. Cody and
I rather enjoy bad movies, and that is a terrible movie that cannot be enjoyed by anybody.
Troy was not a bad movie.
I'm sorry, Brad Pitt melded it in. It was that the story of Troy and Helen and Achilles should have been much, much, much better. That was not even popcorn worthy. That was garbage.
Agree to disagree,
trash.
aren't we, Cody?
Yeah, we have to agree to disagree because that's a fantastic movie.
Y'all need to question your life.
Boy,
Listen,
I don't think
I'll remember your name.
Hang on. Tim, you need to watch Troy, and then you can weigh in on this conversation.
Well, wait. First of all, Tim has, after his recent Bad Boys not being in the top 20 cop movies,
he's lost a lot of credibility there. I don't want Tim on my side on this one.
Guys, I'm not too worried about it. Troy is not going to be done.
All right, I do like the analogy though. Congratulations to Tyler for winning the Trade Masters last night. Well done there, Tyler. Cody, nice little up and comer though. I am looking forward to reviewing it. And Tyler told me that, you know what, even though it wasn't much of a challenge last night, he is a little worried about you in the future.
Chris in the chat says Cody came in with some home cooked dad jokes. He deserves credit for that. So
no, I laughed at Cody's dad jokes.
I did come. I think I gave 5 dad jokes, and 2 of which I actually made up myself. So, and mine were all market related, which was what Matt said the rule was.
I did say it's got to be market related.
No, bro, the rule was to win. It sounds like you didn't do that. So it's what it is. All right, guys, let's talk markets here. And obviously there's not a lot going on. One thing I think we're going to probably do a lot of today is kind of reflect and think about, the year that was here in 2020, things that we saw, that we learned, that we'll never forget, all that kind of stuff. If you're Team Tackle, hashtag Team Tackle in the chat, appreciate you guys popping in. As you pop in, give me a thumbs up. And by the way, welcome to all of our new subscribers. Like I talked about yesterday. We've got a bunch of new people here on our channel, on our YouTube channel, I should say, and we appreciate you guys. If you're not yet a subscriber, click subscribe, click the bell, and come back and join us on a daily basis when the markets are live. Here we are, Matt. The market's doji, and it's been a light news week. We knew it was going to be a light news week in that regard. We've had stimulus updates, but quite frankly, there's no new stimulus update today. That thing that happened yesterday with Mitch McConnell, you guys nailed it. Looks like dead on arrival with those $2,000 checks. They're going to have to accept the $600 ones. What is your read on the market today? What are your thoughts about it just heading into the end of the week here?
I think the market has taken a pre-holiday here. I think the market is literally moving on. Nobody cares about anything that is actually transpiring here today. And we're all getting ready to have a wonderful celebration for New Year's where we can all put 2020 in the rearview mirror. And I think that's a good thing for everybody moving into 2021. But honestly, I mean, quite frankly, it's a slow news day with very, very, very little volume. Nothing is transpiring. And so, yeah, it is a good day to reflect on lessons learned and what you can learn from 2020 moving forward into 2021.
Mm-hmm. Tyler, what are you seeing in the chart here? I mean, obviously, like Matt and I are seeing, I'm sure you're going to confirm it. Doji, nothing going on, light volume. But is there anything that we can pull from the chart?
Not on the S&P. I mean, everything we said yesterday, you just copy paste to today. This should have been a half day. I mean, volume's dead. Nobody wants to do anything here. The story is going to be on the individual stock front if you want something to talk about, but the indexes are just chilling, which it's good.
Not a lot going on there. Quickly flash through, just as we go through our routine, the way we always do it. Just flash through the Dow, S&P, NASDAQ, and Russell for me if you can.
Yeah. Dow. I mean, I wouldn't have pulled this up, but Tim said it, so I'm pulling up the Dow. I'm just going to say same thing as the S&P here.
Hey, yeah. Tim, let me give you why Tyler's like, why would you make me analyze the Dow? On CNBC has like a top stock news stories of the day. And usually they'll have like 20 stocks, right? Little write up on each stock. Today we have Enphase Energy, Western Digital, Tribune Publishing Company,
I saw it,
and Celsius Holdings. And then hold on, just for a token so that we can get some Google analytics here, let's just throw Tesla in there just to say it's up 3%. That's the news. Tesla's up 3%. So so Tyler, how about you do a complete deep dive on all the market indexes to see if you can find any differences in any of them today?
There's nothing.
We got some relative weakness. We got some relative weakness in the Dow. It's down 0.08. I think the S&P is down 0.06. So yeah, there's your headline.
The headline is the difference between 0.02%. I love it.
I do love it when Tim, just in his natural routine, goes, yeah, I know we have a doji on the S&P, but let's see what we can find on the Dow.
Let's dig into it. Let's deep
no volume doji. Tyler, find us some gems today.
Okay, I just did them all for it. Let's move along. They're all the same.
I had a filibuster for Tyler. I'm sorry.
I like it.
That's good.
So what do you do here today, Mark? I mean, most days, quite frankly, a day like this, you're going to run your routine in like 30 minutes. You're going to be done. You're going to be moving on and planning on your holidays if you're just a trader out there. So what is the message for you today?
I don't know. Like, I mean, all I can do is do what I do personally. Like, I did most of the trades I was going to do at the start of the week. And yesterday and today, yesterday was the first day in, oh, goodness gracious, 2.5 months that I didn't place a single trade. Today will probably follow that. Next week, I mean, I don't know. I'm going to evaluate what we have as far as volatility and events next week. But I just have taken these last couple of days off. I'm letting my cash flow do its thing heading into a 3-day weekend. We'll evaluate things next week after we get some of the big news events next week. So,
So Tyler, the exercise I just had you do on the indexes that bore no fruit because they're all dojing here today.
Let's do the sectors.
Let's do all the sectors. Why don't we see if because we're gonna have to rank sectors here a little bit. Why don't we look through all the Excels, and see if there's anything that you're seeing there.
Well, and I mean, it is a good practice if the indexes are that's traders speak for unchanged. You could go to a watch list, sort by percent change. I mean, that's going to quickly show you the outliers of what's moving and grooving. So financials, this is like your gridiron today, right? Right, Tim? I mean, you want to know who's the weak one today? It's energy. You want to know who's strong? It's financials and communications. So on a 1-day basis, that's who's moving, right? The stuff around zero is just market performance. So I actually like financials. I mean, we talked about this in the options report, actually. Remember, we had JP Morgan. We looked at financials in the scouting report last week, and not to toot our own horn, but it is nice when you focus on a particular sector and that sector does okay that week. So I like the strong close here out of the year in financials. This chart looks clean to me. I'm glad XLF's going up. I may or may not have positions on this, but I like the strength here in financials. That's your leader today.
Mm-hmm. Mm-hmm. Yeah, and financials actually caught an upgrade from us on the sector rankings. One thing we will be doing here on a Thursday is meeting as coaches in our scouting report planning meeting. Obviously, with no markets tomorrow, everything's closed on New Year's Day. We're going to be putting together our reports, at least from a planning perspective today, and going through sectors and rankings. Financials looking very, very healthy there, and obviously, energy is one of the weaker ones. It's one of our lower ranked sectors.
You know, one of the things, and that sector analysis. I mean, you can use it so many ways as a trader. I mean, in the great rotation trade where everything went up post Pfizer vaccine, energy was up, financials were up, and you're starting to see some separation, maybe, right? Where financial, I mean, where everything just isn't going up. You're starting to see the stuff that you know, institution and traders really believe in over other areas, and financials during that run up, energy and financials running up. But you're starting to see separation in sentiment, without a doubt.
Mm-hmm.
What's the old phrase? It's not till the tide goes out that you see who's swimming naked, right?
That's right.
Yeah.
Who doesn't have their shorts on? I think it's a Warren Buffett quote. Yeah, it's one of my favorites. Yeah.
Energy lost their trunks, man. They're naked. Built on fluff. This does, I think one takeaway here is like,
I can tell that Cody won the dad joke contest, obviously.
Tyler, listen, you need to go watch it.
Roll the tape. Roll the tape.
Tyler's a sneaky assassin. Give it. It's like a fine wine. You got to give it time a little bit.
Tyler, do you have any of your dad jokes from last night?
Go watch the first dad joke. That one went right over their heads, and it took them a second pass to finally get it. I do have one. I got a few. I remember them. Yeah.
Give me one.
Oh, Tim, how do you get a farm girl to marry you?
You ask. I don't know.
First, a tractor.
First, a tractor.
They were decent. Listen, they were decent. Oh, look at that.
Well, it took Tim a second. I told you it takes it. Good job.
Well played.
Good job.
I like that a lot. So, by the way, I mean, that is the extent of our market analysis here.
Well, let me just say something about. Let me say something about the energy sector very quickly, because you guys were talking about it, and I am in Tackle 25 research. You know, oh man, I've lived more Tackle 25 in the last 2 weeks than I have anything else. So I am inundated with this. And just to give you a quick update, I am down to about 210 stocks in the final research. Now, the final research has dividend fireworks, poor boy covered calls, got obviously the very anticipated latest edition of the DSM list, the Dirty Sexy Money list. And then obviously the Tackle 25. So we have your fundamental list in the Tackle 25. You got the value dividend list in the dividend fireworks. You got your up and comers that we love for massive cash flow or growth in your DSM. And then you have your poor boy cover call, which is your high dollar, similar to the Tackle 25, stocks that are fundamentally based, stocks that have good fundamentals behind them, good growth behind them, but a little higher in dollar figure that you don't love doing covered calls on. You do more, bull put spreads or horizontal spreads. And let me just give you a quick peek here. And, of all of these stocks right now, I have on the latest, I have 57 stocks left for the latest edition of the Tackle 25. Okay, so I still got some cuts to make here, and these now get into the difficult nature of the cuts because you got a lot of very similar type stocks. How many energy stocks am I looking at, guys, for next year's Tackle 25 of the 57 final candidates for the Tackle 25?
I believe I know the answer, so I'm gonna let Tyler.
You can't
guess.
cheat.
Yep, I'm gonna let Tyler guess.
I'll say 2.
Mark?
0.
1.
1.
1.
I don't know.
Okay. Now, in dividend fireworks, which is very energy based dividends, right? You would think a lot of dividend players there, and that's one of the reasons why you want to invest in an energy company. We do have a little bit more, but you're probably only looking at 1 or 2 on that dividend fireworks coming into next year. On dirty, sexy money, there's a lot of filth in energy, which means it's very dirty. There's just not a lot of sex appeal there. So there's hardly nothing on DSM. Literally, CCJ, a uranium company, is the only company we're looking at for the dirty, sexy money list next year. And then poor boy covered call list, guys, it has 0 representation because it has not participated in what has made, PayPal, Goldman, Zoom, Google, Facebook, Baidu, Netflix, PanW, Shopify, Salesforce, NVIDIA. What made them high flyers was their growth potential, and they exceeded it. Energy, not there. I just think energy is going to be a very difficult space moving in the future.
Yeah, I think it is as well. And obviously, as we were going a lot of those numbers, Matt, there are certain pockets in the market that are showing a lot more opportunity than others.
Well, and if you guys look at percentage gain this year, I know energy's kind of had that 1 month bump. I get that. But technology was up 40% this year. S&P up close to 16% this year. And what did energy do?
Negative like 30.
Negative 30%.
Yeah.
So I'm not going to get fooled long term by thinking the month post-election was something real. When right now it's really kind of leading to that was just a massive V-shape out of not based on anything fundamentally.
Well, and if you're going to trade these strategy-wise, I think this is a good comparison where XLE, it's more bottom fishing, selling out of the money puts, non-directional stuff. The more directional is going to be in the leaders like a financials, right? So it would influence what kind of strategy you try to build a trade around, given the relative weakness versus the strength.
Well, and here's the simple reality, guys. To be a Tackle 25 stock, you have to meet certain fundamental metrics. And you can't have a negative PE ratio. And good luck finding a fundamentally value-based company in the energy sector that doesn't have a negative PE ratio right now.
No.
So you're basically buying growth. So basically you're not buying value, guys. You're buying growth potential in energy. Good luck with that over the next 10 years as society moves away from fossil fuels.
Yeah.
Well, I just think this is a sector that you should. I personally don't think you should be betting on this sector over the next 10 years.
Yeah, and we talked about our prediction podcast earlier in the week, and I believe several of us actually had energy is still one of the worst performers, and I think a lot of people are off of it fundamentally, and it's a tricky one.
And again, I'm talking fundamentals and valuation here. I'm not talking trading, obviously, but it's just, guys, when I'm going through this fundamental scenarios, it's really painting. It paints the picture of the market a little bit differently than when you just focus on technical analysis.
Yeah, and I'm excited for the Tackle 25. By the way, we will be releasing that next week, and
next Tuesday,
new Tuesday night, we'll be talking about
next Tuesday night, Coach's show. Tim and myself next Tuesday night. Pro members, the unveiling of the Tackle 25 next Tuesday.
Yeah, I'm fired up about that as well. It's always a fun process, but Matt, at the end of the year, you locking yourself in a basement for 2 weeks and focusing on this thing. I know the work that you're putting in there, so that the team out there should be very, very excited about what this product is going to come out as. I'm
not excited about it right now because I am in fundamental hell.
Yeah,
but I am very excited about it next Tuesday.
Yeah, me too.
Yeah, we got some awesome stocks on the list next year. I'm very excited about it.
Tyler, flash through some commodities here for me real quick. Crude oil, gold, first those two, and give me a technical read if you can.
I feel like with crude oil, it's the same conversation as S&P. Everything we said yesterday is the same today. I mean, it's digesting this big run. I think nothing to see here. I think it is impressive that it's holding above the 9 EMA. Interesting that oil's holding up quite better than energy stocks. I don't know. that there's anything to see there, but I just find that interesting.
I do find it interesting too, Ty.
Yeah, and I don't know if one leads the other, or you just say, well,
you tell me, Ty, because I've been going back and forth on it. Is energy going to catch up to the strength in oil, or is oil going to come down to the weakness in energy? Because I don't see them separating like this long term. And by the way, I don't have the right answer yet, so that's what I'm saying, Ty. You tell me which one.
The best guess. I mean, you look back before the Pfizer vaccine run that sent everything up. Oil was trading in this sideways pattern. Energy stocks were not. Energy stocks were in a downtrend. Yeah. So oil was trading sideways. Energy stocks, I mean, they were getting beat up day after day.
Getting beat up.
I mean, there were some pretty nasty 2-week downtrends in energy stocks during the stretch where oil traded sideways. So, oil trading sideways is not necessarily good for energy stocks. They can slide in that environment.
That makes sense.
Yeah, and maybe it's that people are so indifferent or apathetic towards energy stocks that it takes a big run in oil to finally get the norm up to it, perhaps. In the absence of that, they're like, screw you, energy stocks, maybe.
Honestly, as someone who's been looking at the fundamentals of energy quite in depth in the last little bit, I can understand why somebody paint a rosy picture of energy. It's difficult.
Is really, really hard to do that in the short, intermediate, and especially more in the long term as well.
Well, and not only from a fundamental or a technical or an economic perspective, but Mark, the theme-based type speculation we've seen in 2020, it's hard to see that happening in energy.
Mm-hmm.
I mean, what's your theme going to be in 2021? Oil companies are going to survive.
Is millennials going to be like, yeah, let's love Exxon?
I mean, seriously, like are energy companies going to survive? I mean, what's the theme? What's the theme to get people excited?
Honestly, the theme is what we talked about 6 months ago with like hotels and cruise lines and airlines. Well, they're probably not going to go bankrupt.
I mean, listen, there could be a nice stretch in 2021 once the vaccine gets distributed, assuming that all goes well over the next 3-4 months and society starts to reopen. If that plays out that way, and then oil could get some bumps, but I don't see any sustainable themes for oil for the next 10 years.
Yeah,
I agree.
I think stagnation is honestly best bet, which can be great for dividends, covered calls, cash flow, compounding. Like there's a lot of pretty decent cash flow systems for those things.
I do want to remind Mark of something.
If I'm talking about growth, it's going to be very difficult for this area of the market to have growth.
Mark did have the highest oil target on our predictions podcast, so we'll see if that ends up winning a Volcker or a.
I think there could be some nice pops in the reopening. I'm betting on the reopening. I'm betting on the vaccine gets distributed. I'm betting that life gets back to normal. I think oil could have a reasonable run in that environment, but that doesn't mean 10 years from now I want to be holding the bag on any of this.
Sure. Gold here, Tyler, same thing. Not much to update here today on a little doji. What are you seeing on that?
Yeah, same thing. I mean, we liked the constructive nature of these higher pivot lows and the way in which it responded to that peaking its head above the 50 MA here. It's just been constructive. And as a result, it's just a matter of, okay, let's play a breakout over the 1900. Tough to get any excitement on a day like today because everybody's got New Year's Eve on the mind here. But I think going into next year, this has got to be an area that you're interested in. We looked at this in the Trade Masters last night, looking at a bull call spread. I think the thing to remember is that this is a slow and steady mover. I mean, occasionally you'll get something like you got in July, but that's the exception to the rule. And so if you set your expectations up that this thing's going to break 1900 and do a Bitcoin and go to 2100 in 3 weeks.
Please don't.
Yeah, you're probably going to be disappointed. But it's constructive. So like as long as it remains constructive like this, meaning above a rising 9, above a rising 20, no major high volume down days, path of least resistance, it seems, is now higher.
Mm-hmm, mm-hmm. Yeah, I agree with that. And Matt, there's a couple of goals.
Why don't we just get break out and go to 1950, then consolidate for 3 weeks and then break out in 1950 and run to 2000? Why don't we just slow move towards this thing? I would absolutely hate a blow off top. I would hate a blow off top here.
Yeah.
Well, and you look at what happened last time. I mean, it's not sustainable, right? So
it can't, not in gold.
Yeah.
It's a $10 trillion market, not in gold. It can't be sustainable.
Yep.
Dollar and Bitcoin quick next. Then we're going to have some big picture conversations just as we're kind of going through this. And
lead on the dollar.
By the way, as gold has celebrated its $10 trillion market cap, we do want to give Bitcoin a little bit of love for celebrating the $500 billion market cap.
Oh, did they hit that
Yeah,
today?
congratulations to
Wow.
that. Bitcoin.
Look at that.
That's impressive.
Hey, you know,
Actually, I think they hit it a couple days ago, but yeah.
Listen, did you see the note on Russell Okung, the NFL player, who wanted to get paid in Bitcoin? He has a $13 million a year contract, and he said he wanted to get paid in Bitcoin.
Did?
Seriously.
He's a true believer. I'm not going to criticize. He's a true believer. I would talk to him about some diversification principles.
So he's not currently being paid in Bitcoin, but he wants to be paid in Bitcoin. Is that right?
He wants to get paid in
the
Bitcoin.
Amount of lawyers that would have to be involved in that contract to get paid in Bitcoin, they're going to say no.
We just need to be like, Russell, it's pretty easy to get paid in dollars and convert to Bitcoin.
Yeah, just buy the Bitcoin.
It's like
pretty easy.
Just click a button.
Russell,
click a button.
come to Tackle Trading, email team@Tackle Trading. We'll help you open up a Coinbase account. It's a pretty simple process, brother.
That is actually a very good point. It's like, if I could only get somebody to pay me in Bitcoin so I can get some exposure to this asset class.
Like,
I mean, what else
have you ever done a bank transfer?
Hey Matt, I want to get paid in low out of the money Nick puts on Riot. Can you hook me up with that?
Yeah. Use your dollars to fund your account. I don't know. I get it. I get what he's saying, but it's like, Russell, come on.
Yeah, I agree with that. There's nothing here. Doji, beautiful.
I very quickly on gold though. I will tell you on gold, unlike energy, gold will have representation on the Tackle 25. There'll most likely be at least one gold stock on the Tackle 25 and one stock on dividend fireworks for the gold. It's an area of the market that I do have some subjective belief in. There's no doubt about that, but it's an area of the market I feel is primed to set up.
Mm-hmm, mm-hmm. And I know that you were looking at several names in there, Matt.
If I could cheat, I would just put GDX on the Tackle 25 and call it good.
Right. But we're going to find one or two, one probably.
No, the Tackle 25 is a stock list. It's an equity list. It's not an ETF list.
Yep, that's right. Dollar, Bitcoin, then the pound dollar cross pair. Tyler, I've got news I've got to get to as well.
Well, Lord,
I know you don't want to. We're doing
I don't. I don't care, and neither does the market. Nobody cares.
It's the finality, bro. It's the finality.
Nobody cares.
I know. I get it.
Nobody cares.
We're doing it. Go ahead, Tyler.
Dollar's popping today. Do you make anything of it? I don't know.
No.
I mean, maybe there's a little bit of slowing momentum, but on a low volume day, it's tough, right? So
I think everyone should have listened to yesterday's show where Matt and I said that big moves in the dollar can retrace very quickly.
It retraced extremely quickly.
And look what it did yesterday versus today.
Yeah, I think it's just oversold bounce here, Tim. But wake me up if we break above the 20 MA. Until then, downtrend continues.
Okay, and then
see, we got through the dollar without you giving the news, bro.
No, give me the pound dollar.
No, I'm filibustering.
I knew not to even go take off.
I'm filibustering.
You know what?
Listen, I will talk about the difference between a spending bill and a fiscal bill if you need.
Brexit's done. All right, we're done.
Okay, thank you.
Look, when he says pull up the pound dollar cross, I know what to put in here.
GBP/USD. GBP.
No, you don't need to.
It's already done. What?
Thank you, Ty.
No, you're good.
No, okay, fine. News very Tim, go. Fine.
I find this to be incredible just from a life perspective. I remember when it happened. I remember how big of a deal it was. Brexit, we've been talking about for 4.5 years now, guys. And finally, after 4.5 years, 2 general elections, many deadlines that were missed, pushed, reassessed, all that kind of stuff, all of the clamoring from politicians on all sides, the UK has finally approved through the House of Lords Boris Johnson's Brexit deal, and they are going to have a Brexit.
Okay,
so apparently they finished.
Question I have, congratulations, Boris, you did fine. The only question I have is not for Boris Johnson. It's good for Boris Johnson, good for the UK. Glad it's settled with the EU, but Tim, for 4.5 years, we've had to deal with nothing but headline news on every whisper of something hypothetically that one politician may or may not do between the Brexit and the European negotiations, correct?
Yeah.
Okay. And every day like that's happened, it's been all over the news media, correct?
Yeah, they blasted
Where is it today when the news actually is real? Like, I'm dead serious. I'm not joking. Where is it today? Go find it on Market Watch. Go find it on FinViz. Go find it on CNBC. Nothing. Crickets out there. Man, these news organizations are literally criminal.
Although it is a gift from Boris Johnson and the House of Lords and the European Union to all of us to get this thing done. I just want it out of my life.
Thing isn't about Brexit. Like, congratulations to Boris Johnson for settling that deal and actually getting that through the EU Parliament. Anybody who's been around that EU Parliament, not the EU, but the British Parliament over the last 4 years debating this, I mean, we've had some popcorn-worthy, amazing moments coming out of the British Parliament. So congratulations to them. But seriously, to the news media organizations today, where are you at today? For 4.5 years, you've been pumping and pumping and pumping and pumping how important this situation was, how historic this situation was, how big of a risk to the market this situation was. You've boondoggled everybody in the market for 4.5 years. But today, when Parliament actually agrees, crickets?
Yeah.
Matt, I think you described every important news headline
that
relates to the markets over the past 10 years.
Listen, people should stop watching CNBC. They should stop going to Market Watch. These are not actually relevant information any longer.
They're a news rumor, and when actual news comes out, they don't know what to do with it. Because when you have journalists that aren't technicians and aren't fundamentalists and aren't investors trying to write the headlines,
they're 1920s yellow journalists, Cody, is what they are.
They don't know how to interpret the actual market news. And so all they do is pump the rumor.
It's worse than that, Cody. They're not trying to actually inform their clients on the news or the market or the importance or relevance to the market. They're just trying to sell advertising and ad space. It's clickbait nonsense, and they should be called out for it. And they're all a joke today. They are all a joke today.
100%. Agree with that.
I agree 1,000%.
All right, we got 5 minutes in on the Forex.
I've warned Tim, by the way. Listen, y'all can be like, Matt's on his tirade again on a soapbox. That's fine. I don't care. I warned Tim.
I knew what we were doing here.
Hey, I was just gonna say, like, the dollar did exactly what Matt and I said it would do yesterday.
Cody, you already said that. You don't have
I'm not even upset about that snapback.
I literally already said that.
That's why I tried to move on. I'm trying to say that I was on Tim's side of quickly getting past this.
All I know is I really underestimated how long this dollar conversation would go on.
You could have got your hot pocket, bro.
I know. I could have eaten. I could have I misread this room.
They're back on the S&P.
You misread my anger about the Brexit nonsense.
I totally did.
And leave it here, Tyler. Actually, back it out to a yearly chart, guys. There's no stock news I care about today. There's some little stuff out of a couple of different companies, but nothing really important. One thing I did want to
I can go through CNBC's top 5 stock list today if you want.
I doubt there's anything relevant. Just highlighting that Tesla is up. No,
Tesla's up.
Tesla's up. Okay.
Tesla's up.
But one thing
the day that ends in a Y, Tesla's up.
That's right. They had an incredible year. No doubt about
750% growth in Tesla. Ooh.
Criminy.
Think about that number for Tesla, guys. For a large cap stock like Tesla this year.
How much market cap did they build? They probably
about 500 billion.
500 billion in market cap. Mm-hmm. Yeah. But
they built 3 Walmarts, guys.
Do they have the revenue Walmart, Mark?
We don't need to talk about that.
No more tirades right now. One thing I did want to talk about, guys, just kind of reflect. I mean, obviously, here we are, the last day of the year. We're going to be all doing New Year's Eve type of traditions and whatnot here with family, friends, that kind of stuff over the next 12 to 24 hours. Obviously, it's been quite a year in 2020 and in the stock market as well. One thing I did want to talk to the coaches about and just have a conversation with Team Tackle out there is just the general lessons learned in 2020, what you got from it, what you'll always remember, things that you'll never forget, and all that kind of stuff. And Matt, I'm gonna let who do you want to go first? Matt, you want to go first? You want to have one of these other guys go first?
I don't care. What's the question?
What will you always remember from the market in 2020?
Ooh, there's a lot.
I'll have a quick one because I know what
Go, Cody.
someone else's answer is going to be. So I'll basically say.
And while we're conversating here, Team Tackle, give us your one thing that you will always remember from 2020 from a trading or an investing perspective. All right, like Cody, go.
Mine's gonna be quick because I know we talked a little bit in pre-production what everyone's answers are. So I'm just gonna say, definitely look back at your own account, see what hurt you the most, and correct that. Before trying to learn your task, whatever, figure out what hurt you the most in 2020, and if you can eliminate those trades that you allowed hurt you, then I think that's a good backwards reflection on your journal in order to do that. And other than that, I also noticed that the dollar gets smoked anytime the government gets involved.
Dollar gets smoked anytime the government gets involved. I mean, the dollar had quite a year, no doubt about it. Jimbo's saying don't panic,
Yes.
That is a big one right there.
Yeah, that's
I'll give one New Year's resolution. I'm going to make it my goal to send Matt as many webcams as I can so he has no excuse to never have his camera on.
I have 3 webcams on my desk right now.
Just hasn't found the right one yet.
Yeah, he'll get there.
Me and Tim are having a long-term debate going on this one.
We have. This is an internal inside baseball conversation that we're not going to. Tyler Perkins.
No, I will tell you though, Cody, to go on yours, I will be sharing my video far more in 2021 than 2020. Mm-hmm. I have promised him that.
It is a New Year's resolution. Jonathan Julian says, I'll always remember how fast fear and greed can cycle out for 2020 from March
true,
and
Jonathan.
after.
We went, guys, we went from
gauge.
max fear in March to max greed by May.
Yeah,
that's a good one. That is a good one.
Wow.
I mean, Mark, can you even think of any other market environments that were anything like that from a fear to greed perspective? I mean,
Trade War 18.
Trade War 18.
Well, now before we were around, there's other examples, but that was before we were around trading. I mean, I'm sure 1987, October 1987, I'm sure people have many, many, many memories from that ultimate fear to ultimate greed. I mean, I'm sure back in 1929 to 1930, you had a lot of that. Anytime you have these massive drives, but the recovery is what is really impressive here. And I think that has changed a little bit in how markets behave.
Mm-hmm. Mm-hmm. Another great one here from Tyler Perkins. Tyler, great to always see your name. Position sizing and paying attention to the technicals. Lesson learned from Tyler.
Tyler, that kind of goes to what kind of your lessons learned in 2020 and things you'll remember. What about you?
Tyler, me, Tyler?
Yep.
Yeah, you, Tyler.
All these Tylers going around. I'm getting confused. What was the question?
What was the first part question? What is one thing you'll just remember from 2020? And secondary is what did you learn? What is one thing? I know as traders, we like to reflect on lessons learned all the time.
Yeah.
But what is that one lesson that you think you can pull from 2020?
Since Tyler brought up the price action thing, I'll say this. Every time we go through a crisis and recovery, I'm just reminded that every institution, every politician, every person in power has a vested interest and an incentive to support the stock market. And so it's like, no matter what is ailing the market, you will see intervention, you will see them pull out the stops to do what they can to ease the pain and cause the market to recover. And that is why it will never pay to be a perma bear, because everything's stacked against you. Everything's stacked against you. That is also why it will never pay to panic, because inevitably, whether it's 1 month later, 3 months later, 6 months later, 3 years later, you will always regret abandoning ship on at least long-term investments if you're the guy selling when the market's down 20, 30, 40%. It just never works.
Well, and honestly, Tyler, one of the lessons that I have learned kind of goes off what you're talking about. You know, in typical bear markets, you go back to 08, you go back to 2000, you go back to kind of our natural market cycle that has been dominant in our financial world ever since the central bank was created all the way back in 1913. you have this traditional market cycle where you have it gets driven through, you know, positive economic policies, obviously, but primarily through interest rates. And you have this natural cycle of raising interest rates, lowering interest rates, and the market price kind of follows that. Well, in that market cycle, you could average this thing out from a time frame perspective. You know, yeah, we would have these 20% drifts, but we're talking about major market cycles here.
Yeah.
And so when you're talking about it, you know, going up 5, 6 years and then contracting 1 to 2 years, right? Up 5, 6, 7 years, contract 1 to 2 years. Up 5, 6, 7, 8 years, contract 1 to 2 years. I mean, out of the 13 cycles we've had in the last 100 years, you're really looking at an average market cycle at about 7, 8 years with, you know, 5, 6 years price appreciation, 1 to 2 years of downward movement in price. And in that 5 to 6 years, you know, I did this whole thing, you know, a few years back. Okay, the 5 points to a market reversal, right? Where you have your slowing momentum, and and I was talking about major market reversals on weekly charts, not on daily charts. And you have your slowing momentum in chart, right? And you have your double top, and you have your double bottom, and you have your, you know, your violation of support, the breaking of the M formation, for example. And then you have your kiss of death. And when you go back to 08, 09, you know, that top of the market really took about a year to kind of form that top of the market. At the bottom of the market, you really formed it about 11 months on that drop. But you go back to 2000, the bottom of the market took a good 2.5 years to kind of build into that bottom of the market. And that's fairly normal, right? That price takes time. But then when what we saw with really kind of spawn point of monetary theory in America was 08 and 09. Look at the V shape. And if you look at this on a weekly chart, you'll kind of see what I'm talking about. But look at this on a monthly chart here. Give me like a 15-year monthly or something along those lines.
Yeah.
You know, and so when you're looking at this monthly chart here, you see in 2000, look at that 1, 2, 3, 4, 5, 6, 7, 8, 9 months at the bottom.
Yeah.
Look at that. Like just very consistent, double bottom, double top. Look at the bottom here in 2008. Look at that bottom here. Look at that. Now the speed increases, right?
Yeah.
But you're still talking about a good, you know, 3-4 months of consolidation before we start to see that. Now look at the bottom in 2000, in the recession we went through in 2000. Look at the speed increase over time. And so one of the things to kind of go on what you were talking about, Ty, is I truly do believe 2008 will be looked upon historically as that moment in time where we shifted our philosophy from an economic perspective, from our traditional capitalist economic approach, which has been, you know, broken down from the 1980s all the way into the mid 2000s. But finally in 2008 is where we really truly embraced modern monetary theory in terms of constant Fed monetary injection into the market. Whereas at this point, the stock market is no longer a general reflection of the health and nature of the economy. And it's really just a reflection of this aggressive monetary theory. And the speed of the market is what has truly changed here. And so to go into that speed of the market, we're going to have nasty drops in price in the future, guys. Like what you're seeing in 2020, yeah, it might have been historical from a pandemic perspective, but get ready for that type of volatility in the future, because we've been seeing this transition in the speed of the market increase over time to the point where, as of right now, I think 2020 finally was that last nail in the coffin of our traditional capitalist approach to the marketplace. Mm-hmm. Whereas now the market has fully embraced modern monetary theory, and there's no out from that. And because there's no out from that, traditional market cycles are no longer a viable investment thesis moving forward.
Mm-hmm. You know, what's interesting about this, Matt, is you and I and many of the coaches, Mark, Tyler, internally, we've had conversations about how the speed of market crashes were going to change in the last 5-10 years. I remember in 2015, 16, 17, you and I talking about, well, we expect it to be a lot faster when it does happen. But then when we finally get to it, and it was as quick as what happened here in March, it was even in the moment, you know, you can plan, you can think through it, but it was still obviously very shocking. There's no question about it.
But the reason I brought that up is because it really goes to Tyler's point on panicking in these types of moments. Yep. If you panic in these types of moments, I don't think it takes 3 years to recover in the future. Now, there's going to be certain areas of the market that is obviously, like take for example, energy, right?
Mm-hmm.
But we're talking broad markets here. I think the speed is here to stay, quite frankly.
Well, and isn't it dangerous too? Because it's like,
it's extremely dangerous.
It's like, look,
I don't agree with monetary theory in any capacity. I think
well,
it's
just
extremely
to
dangerous.
your point of it being hard to go back, where it's like, freak, if every time they just cut checks, it's like, why would, if you're the politician in power and your constituents are clamoring for action, unintended consequences, be darned. Why wouldn't you just pass a bill and cut checks every time?
Here's the reality in American consumer history. Once you give them something, it becomes a standard, and it's very, very difficult to come back from that. And so I get it. We're talking about $2,000 checks now, and it's not that big deal. Yes, it is. It's a massive, massive, massive deal, because if we do that, it's going to happen again. And at what point do you literally just bring this house of cards down? Because all we're doing in that, guys, is putting on debt burdens on future generations. That's what we're doing. So what we're doing by saying everybody in America needs $2,000 is we're basically saying, let's take away $2,000 from our kids.
Well, and isn't a good parallel like precedents in courts, right? To where they're very careful about, we don't want to set this, it's a dangerous precedent or whatever. Doesn't seem like they talk about that as much when it comes to passing
honestly, it doesn't matter anymore.
Honestly, Tim and I were getting after this the other day, and I'm just like, I want to have a debate as a society on whether or not this is a good idea, because this is part of modern monetary theory.
Before you can even do that as a society, you got to make sure society understands the implications and repercussions of both sides. That's the problem. We have a lack of knowledge problem is what we have.
Well, and again, we're not going to cure this problem in the halftime show here today. But again, reflecting on 2020, what I have seen out of the consumer base in 2020 and what I've seen out of the political atmosphere in 2020, anytime something negative happens in the future, we're not going to go back to pick ourselves up by the bootstraps, lace them up a little tighter and get the job done, as we've done in America for the last 240 years. We're going to basically say, how much money can you give me to offset some of this short-term volatility? And that is socialism. Prove me wrong, but that is socialism.
Mm-hmm. No, and I think that debate at some point has to happen in society, man.
It is going to have to happen.
It has to happen. More lessons, by the way, coming in the chat, and I'm loving the conversation here, guys. A lot of people stepping in. Guitar Flip says the one that really stuck with me was time in the markets is better than timing the markets. And quoted Swin.
Swin, beautiful. I'll remember that statement. It's one of the best ways I've ever. That is one of the best, most amazing, articulate ways I've ever heard that similar philosophy put. I loved it.
Yeah, I love
and then
that.
Swin is so humble. He then accredited it back to all the coaches, but I'll give Swin that quote.
Swin's a student,
mm-hmm.
and Swin knows Swin knows exactly what I mean when I say that. Mm-hmm. Swin's a student.
Yeah,
he threw it back to Tyler, threw it back to Noah, threw it back to Gino, threw it back to you, Matt. Like he said, he's heard this over and over. I think he put it the best in those 8 words.
Mm-hmm. Yeah. Jonathan says, keep it simple. Bread and butter gets the day, and journals show progress and weakness. Make sure you're journaling. Those are great lessons, Jonathan. Let's see here. Marky, what did you learn from 2020? And what's something maybe you'll never forget from the markets this year?
Well, the thing that will always stick with me is the smash the buy button mentality that developed in 2020. Now, whether it is something that these new traders, and a lot of them made a lot of money, a lot of them went broke, a lot of them blew up their accounts, a lot of them are doing well, really just rampant gambling in so many aspects. And that mentality that stocks do not go down, so you can just smash the buy button. One of the things along with that I'll never forget, you have no downtrends. Yeah, sure, you can find a stock here or a stock there, but in normal market conditions, even when the market is up, you have plenty of different companies trending down. You didn't really experience that after the March lows. Very unusual, very strange. It threw bears for a loop for a while until they caught on that, oh my gosh, normal bullish, bearish trading mechanics are a little bit broken right now. And, that bubble-esque feel of greed and smash the buy button and nothing ever goes down. Can that last forever? Of course it can. Eventually you will have stocks in a downtrend. Even if the market does well, even if most things are doing well, you will have things separate from other areas of the market. And, you know, I think remembering this year for that will always stick out for my mind because it was so new, so different, so unique. So smash the buy button. That's what I'll remember in 2020.
One thing I'll never forget ever in my entire life is crude oil negative prices. You know, that story, just what happened there, you know, just thinking about it from a historical perspective. Guys, I didn't think I'd ever see that in my lifetime.
Yeah,
you know?
like pull up the chart of crude oil when we're talking about this, because crude oil, Tim, I mean, the chart doesn't even reflect what happened that day.
Yeah, it
Well,
doesn't.
that's the problem, is it rolled to the next futures contract, you know, a week before delivery, right? So it stops tracking.
Do you guys remember what the low price was?
Man,
I swear, minus 41.
It was like minus 41 or something like that.
Something like that.
I mean, we were all watching it on Thinkorswim tick by tick, right?
We were like in the halftime report.
Yeah, it was crazy.
And when it went to negative, it went from negative to negative 40 like in 10 minutes. Like it was, I've never seen a crash like that ever.
It was spectacular, to say the least.
It was the market saying, no, I don't want it. No, I said I don't want it.
Like Saudi Arabia was literally saying, we will pay you money to own our oil right now. We have nowhere to store it and nobody's buying it.
That was great.
I mean, it was crazy. I mean, it was
crazy.
I mean, we've had a lot of moments. Like, my goodness, you could do a Letterman top 10 list with all of the moments from this year.
Yeah,
right?
but okay.
This is one.
Tesla's 750 price appreciation versus crude oil going negative for the first time in history.
Mhm.
I mean, that crude oil, I think, is the number one thing that shocked me this year.
What is the market cap of Tesla right now?
It's like,
Tesla,
oh, Lord Almighty, I haven't checked in a week.
658 billion.
Yeah, I was gonna say
658 billion. Yeah.
So it would have to double again to get to $1 trillion. So March?
Yep.
Could happen. Oh my guys, we're sitting out here.
I do like that $700 breakout there, Ty.
Playing technicals still.
Oh yeah.
At what point are we just going to be? At what point are we just going to say Tesla just wants $1,000 again?
It wants it right now, bro. So
is it too early? Are we
mean,
now going to do the once it breaks 700, it just always goes to 1,000?
Mm-hmm.
Oh,
by the way,
good.
speaking of Tesla and some of these high flyers, Mark, and the smash the buy button, that's another thing I'll never forget is the introduction to an entire generation of traders and investors who found themselves into the market. I mean, we talked about it all year long, you know, and welcome to the markets, you guys. I mean, commit to education if you're out there listening. But there was obviously a newer breed of traders. And Matt, we came in young. Somebody's got to come in young.
Oh, I love it.
It is what it is. Yeah. That is
and
really
we
cool.
made all the mistakes that they are very publicly making. And it's good. It's a good thing. It's a natural cycle of every trader.
Yeah. And by the way, Wall Street always saying how every one of them are always going to lose. And these kids, at least in the short term, seem to be putting some profits in their
These kids are beating them in the short term.
Yeah. Yeah. Anything else, guys? I mean, we're just sitting here reflecting, you know, thinking about what we learned or can think through in 2020.
Honestly, I think because I think this is the time where all of us start to reflect, right? And start to think about how we can improve, you know, as traders, as individuals, everything. But I think the lessons of 2020 are the list is going to be pretty strong, quite frankly. But I'm really seeing this bigger, more macro, systematic changes, quite frankly, than the micro changes that we're seeing in certain areas of the market. I do believe there are some macro fundamental changes happening in our market before our very eyes,
with implications that you know are pretty scary.
With unforeseen consequences long term, but short term price appreciation everybody celebrates.
Yeah.
I got one that's not necessarily market related.
Go for it, bro.
This past year has been one that has really kind of shifted my overall thinking. I mean, next year I turned 30, hit the big 3-0, and I mean, through my 20s, it was all about, you know, grow my money, grow my career, grow everything that I have as fast as possible. But this year with Liam coming into my life, it became way more apparent that it's more about the people in your life than the things that you have in your life. And that's one reflection that I have on 2020 that I don't think I'll ever forget. I mean, being 6,000 miles away, living in Hawaii, being away from family, being away from friends, it really hit me hard realizing that, I can be succeeding in all, in certain aspects of my life, but if those other ones aren't up to par, you don't feel fulfilled. And that's probably the biggest lesson I've taken away from 2020. Not market related, just that's my lesson in 2020.
I love that.
I love that, Cody.
Yeah, thanks for sharing that, man. And being a new father, obviously, Cody, I know that you've had some of those reflective moments, and we've all been there.
I mean, think about Cody in this year, moving out to Hawaii, testing a new phase of his life, getting out there, taking his young family, having his first child out there, and then a pandemic hits. And when you think about it, he's away from his family, his loved ones, his wife. They were raised in the same community. They're all from Texas, and they're all family driven, and you're literally in Hawaii. You can't travel, and you can't just drive over to mom's house to check on mom, right?
Even before pandemic, it was just, we'd have to, book a plane trip and plan out and take PTO. Whereas like when you're close to family, like Matt just said, jump in the car, take a weekend trip, 2-hour drive south, right? But now, even with the COVID and pandemic and everything, it's like, well, now you got to make sure you take the test before you leave. You got to take a test before you come back. You got to make sure they come out negative. Otherwise, it's like, oh my God.
Yeah, it's a big deal to travel.
And that isolation feeling just hits you, and you realize that there are more things. There are things that are more important than the dollar sign in your account.
Well, and that isolation mentality can bring you to a dark place at times, right? But having that positive response to it, Cody, saying, listen, I recognize this, and I want to make sure that I'm fulfilling my entire life instead of just this certain aspect of life. I love the positive nature of your response there. Just love it.
Mm-hmm. Yeah. There've been big moments in my life in that regard as well, Cody. My daughter, who was in the Army for 18 months, she's now home getting ready to start college while she's in the reserves, and having family back in that regard. I mean, you're right. The people in our lives are what makes it matter. And, that's why community is the first principle at Tackle Trading, quite frankly. Obviously education, financial education, growth, goals, all that kind of stuff. But really at the core of who we are at Tackle Trading, we're a community, veteran coaches, experts, subject matter experts with beginners who are teaching them, helping them grow, helping steward their journey and all that kind of stuff. So thanks for sharing that, man. I appreciate
that.
Well said. Let's start getting some final thoughts here. We do have some programming today, by the way. Mark is going to be doing his At the Closing Bell, show at 1 o'clock Mountain, 3 o'clock Eastern Standard Time. And we also have launched our holiday special, by the way. Tyler, if you can bring that up for me, please, if you will. Every year, Matt, 3 times a year, I believe, we put our annual on sale. We also put a couple of different things on sale. Standard, if you've been around Tackle Trading, we do this around New Year's every year. We have, and go ahead and scroll down just a little bit, Tyler. For the next 8 days, we have our annual on sale at $897. We've got systems like Tackle 25 at $145, Cash Flow Condors at $495, the Bear Market Survivor Guide at $495 as well. You can check those offers on our store page, and I'll drop a link in the chat just to make everybody out there in Team Tackle aware of what it is we're doing there. Marky, final thoughts for our community out there. Just last show of the year. I know you're going to be talking to him here in about an hour and a half, but just final thoughts from you, sir.
Listen, it's been a great 2020 for many traders. If it hasn't been for you, listen, we're in this for a long time as traders. I plan on trading in 2020 and 2021. I will be managing my accounts the year I die. I will. I love this stuff. I enjoy it. I enjoy talking about it. I enjoy getting better at it. I feel like I took some steps, and I felt like I had knowledge. I've been around a minute or two in this thing coming into 2020, but I felt like I learned more, and I felt like I got more disciplined. There's always progress we can make, and there will be continue. That's the human nature. So we're going to be trading together, and hopefully we interact with all of you fine folks for many years to come. It is a beautiful world, this thing we call trading investing. It is a map that we can get to our financial goals. And like Cody was talking about, those things that matter. I mean, that's why we do this. I mean, listen, I'm not going to judge you if all it is for the money, but I know for most of us, we're doing it for the money so that we can have the other things, the freedom, the time, the ability to spend time with family. Don't give up. Seriously, never give up. If you had a great 2020, spend some time this weekend reflecting. How can you get even better? How can you get more disciplined? If you had a rough 2020, find those lessons you can learn, but never give up. The markets are going to be here forever, as long as we have a society. This is a skill that can keep on paying in future years. Invest in yourself. 2020 is going to be great. Set forth the goals this weekend and what you want to achieve, and never give up. And we'll be here for you. I know, like literally forever, like until we all die, because this is our home and we love doing this. And that's a great combination.
Yeah, Mark, and that's a
Mark.
fantastic message there. Tim and I know one of our students from a few years back, had some ups and downs, but he's really worked on it, really stayed with it. And I've known this individual for a good 7-8 years now. I was one of his mentors along the way, and he had some ups and downs. And we've stayed in close contact with this individual for the years. And he sent me and Tim a message the other day, and he says, "Guys, I finally feel like I've arrived." He's managing multiple accounts. His wife's IRA account is up like 180% this year. His 401k is up like $150% this year. He's like, "I finally feel like I've arrived." And that was in a year of 2020 where we had all of the crazy nonsense and navigating everything we had to navigate. And yes, the market, looking at the last 6, 7, 8 months, has been fantastic. But when you look at it from a yearly basis, the S&P is only up 16% this year. And so, like, yes, regardless of whatever the short term is, realize every trader, every investor goes through short-term problems. They do, but stick with it long term. Markets appreciate long term. Stay with it long term.
I love both these messages from you guys. I can't really add anything to it, so I'm going to leave it at that.
Well, I was just going to say Happy New Year.
I'm just going to say Happy New Year's as well, guys. I mean, tonight I'm going to have a quiet night. Everybody else in my house, by the way, is going to go out and do little things and whatnot, but I'm pretty much going to stay home with the dogs, not do a heck of a lot. I don't have a lot of New Year's traditions myself.
When was the last time you stayed up for New Year's?
Bro, I ain't going to be up at midnight. Who are you kidding? There's a reason they're going out with family tonight.
That's right. You seriously are not going to be up at midnight tonight.
He wasn't up last year at midnight.
There isn't a 0.01 delta chance that I'm up at midnight tonight.
He wasn't up the year before at midnight.
It doesn't.
He wasn't up the year before at midnight.
In fact, I could probably.
In fact, I'm going to call him at midnight just to wake him up.
When does the first international time zone ring in the new year?
Oh man, we've already rang in.
So, all right, Happy New Year.
We're good.
I can go take a nap right now. I'm good.
They already did. It's New Zealand. It's New Zealand. They're the first. Actually, I think there's one little island off New Zealand by like 0.1 milliseconds, but New Zealand is the first one to ring in the new year.
I think we're good.
Yeah.
I think we're
already in the
New Year's here, bud.
Yeah. Yeah, no, Happy New Year out there. Whatever it is you're going to be doing, make sure you stay safe. You
stay
bring it in a safe way. Yeah.
Hey, Tim.
That's right.
Stay safe.
Tyler.
Like you got a dog this year, right?
I did. Yeah. We had 2 dogs actually.
1 dog, or 2 dogs, or 3 dogs, or 4 dogs. What are we talking about?
We're not talking about the total.
I'll give you a joke you can share with your friends.
I was going to say Tyler has his joke voice on. I could tell already. He has a specific voice that he gets when he tells a joke.
Yeah.
Tim, do you know why there's confetti up your dog's butt?
Oh.
This is not going to be the last thing we say on the halftime report.
Yes, it is.
I do not.
Because he's a party pooper.
Happy New Year.
And with
everybody.
that, we are out.
We'll
Happy New Year, everybody.
Yep.